Ladies and gentlemen, please welcome to the stage our TED Talk, M&A Trends.
I'm Sima Vasa. Nice to meet everybody. I'm actually doing a presentation on M&A Trends. I have lots of different roles in the ecosystem. This one I'm going to represent as an investment banker. Nice to see everybody, and so many new faces, which is quite amazing. Before I go into actual trends and understanding what acquisitions were done and the focus of what's happened in the market, I wanted to take a small pause to talk about what's going on outside of the M&A market that might be impacting M&A trends. I've had the good fortune to be the co-chair of the CEO Summit of Insights Association, which Steve used to chair, and I now chair with Isaac Rogers, and I don't know if Melanie is here, but Melanie as well of the Insights Association. We do a quarterly pulse to ask CEOs a set of questions, basically business metrics, how are they doing, what are they worried about? And when I looked at the data for the last 4 quarters, it was consistent that CEOs are very worried about, 29% of CEOs said consistently they're worried about the economic uncertainty. Not a surprise, right? You pick up the paper or look at the news, you can see the economic uncertainty. Interest rates really caused some tension in terms of servicing debt and the ability to borrow more money. 34% said that they're really concerned about clients making decisions about projects and the uncertainty as to why is it taking so long? And we've diagnosed that maybe there's reorgs, maybe that they fired this most senior person and the junior person can't make the decision. We did hypotheticals to understand what was going on, but still consistently it's a trend, and it's a concerning trend because it impacts our industry in terms of purchasing data. 24% said that they're very worried about the acceleration of AI and how fast it's being adopted. And I want to spend a few minutes here because I do think that this translates into some of the trends we're seeing. AI is transforming business and personal lives. I mean, somebody asked me, so what do you think of AI? And I said, it's here. It's not a shiny object. It's here. On our personal lives, we use it. There's recommended, you talk to chatbots all day long about when you get customer service. It's here. As a business, businesses are truly committing to using AI. And one of the reasons is that there's so much first-party data, which is good for us, survey data, and also third-party data that finally can be ingested and create insights for businesses at a very effective cost of compute. So I don't think I have to convince you, but I will try to convince you a little bit more. Looking at some research, 71% of CPG leaders said that they're going to integrate AI into their business. 90% of retailers said they're going to integrate AI into 6 business functions at minimum in 2024. And 72% of the S&P 500 mentioned in their 10K filings that AI was going to be a core part of their strategy. It's here. However, AI, if that's your table stakes, one of the biggest competitive differentiators is the data that you put into it and making it more personalized for the business outcome. And this is the trend that I think is really important. AI is breaking data silos within enterprise organizations. There was a time when market research would have their data for themselves. There was a time when point-of-sale data was for the category managers that worked with retailers. There was a time when the CMO had data of marketing outcomes and they held on to it. Chief revenue officers knew sales outcomes. However, and obviously financial data, however, if they want to make the AI be competitive, these data silos are breaking. And they're being integrated and being used across the organization. And in many times, they're answering questions that they might not need to do research on anymore at a point in time. McDonald's launched an initiative, I can't read the name, across 43,000 franchises to really take the data from the kitchen to the drive-through to be able to provide better customer service. That could be fueled with some first-party data, but they're also using the other data to help inform their decisions. AWS is working with financial institutions, taking all of their data and looking at how they can improve security and build a better customer service model. Again, I'm not saying it's replacing research, but it informs more about the decisions that clients are making. Obviously, it's not all roses. There's deep concerns about how data is sourced, and I think that's a really good thing for this industry. First-party data is ethically sourced, and it protects privacy, and there's a role in place for it to ensure that there's competitive differentiation. So how does that impact the Restech ecosystem and adjacent industries? A lot of companies have to focus, and that's what we've seen a lot in terms of the M&A activity. We saw divestitures. Kantar sold their media business for $1 billion to HIG Capital. We saw just recently Precision Sample was acquired by Aquest, sold from Toluna. See consolidation. Ipsos bought 3 public opinion polling companies. They expanded their geography and they consolidated their competency in that sector. And on a smaller basis, we're seeing that the small boutique market research companies are being consolidated. And we saw most recently Illumina sold to Radius Group. And they bought, actually Radius Group also bought 7 Sense. Then there's the acquisition of new capabilities. We saw YouGov acquire Yabble and KnowledgeHound. We saw Ipsos buy Data Smoothie, which was an analytics and visualization platform, and their thesis was they needed to move faster on the analytics side, and hence they acquired that business. Dig Insights went beyond traditional research and bought EPCO, which is a trends and foresight company to help clients figure out what products and services should they offer in the future. Not today, but in the distant future. So, who gets MR Web? You get the announcements. I decided to take a snapshot of the last 80 deals that were in MR Web and classify them by which ecosystem the transactions took place. So, forgive me, I thought I had it in here, but I'm going to go close to reading it. I'll go over here. There's the ag tech ecosystem, the Restech ecosystem. Steve, can you read that for me?
Enterprise SaaS.
Thank you. Enterprise SaaS, MarTech, and then data sciences and analytics. Thank you very much. What I found interesting here is a couple of things. I think these ecosystems have been really generally looked at differently. And when I look at this data, I can see overlap, right? Proprietary data that's generated by the Restech ecosystem and bringing it with analytics and data science to make it really scale at a larger level. Also, we're seeing that data is informing activation. This is not a new theme, but when I looked at the data, you could see more and more of that happening. So what do investors think? I think a lot of investors investors held on a little longer. Like people who wanted to sell in 2023, they kind of said, you know what, I'm going to wait. Maybe 2024 might be better. But we're having conversations with private equity firms, and they're saying, you know what, we need to sell, even though we might not get the return on investment as high as what we would have liked. In addition, they're closing new funds, and investors are looking for platform companies, some add-ons, and so that's really a great sign. The other difference that we're seeing is that investors are also balancing risk. They definitely want growth, and I think growth was really hyped up probably 4 or 5 years ago, but they're balancing it with profitability, or at least near-term profitability. Okay, don't write the numbers down. This is a trend chart. It's from GF Data. It's a company that collects private equity deals on an anonymous basis and kind of gives you at least objective measure as to what's going on with valuations and the number of deals. So this subset of data, it really shows you kind of deal volume on the white line. Everybody remembers 2021 when you woke up every day and there was a deal getting done at some great valuation. 2022, the valuation stayed strong, but less deals. I think 2023 and 2024, we saw that the valuation stabilized. I'm going to caveat this by saying the valuation number for any company depends on so many factors. So I really encourage you to look at the trend here. Good news, 2024 deal volume picked up, and obviously there was a great deal on our industry just recently with Rep Data and Mountain Gate Capital, which is fantastic and it bodes well for the industry. Implications. I think Michael referred to this. We're definitely seeing new business models that really focus on tech first and drive really great margin. And they might not just be solely focused on research. They might have a couple different vertical industries focus and be able to leverage the core assets. Definitely analytics and storytelling will continue to be important depending on what part of the value chain you are. And there's a renewed importance of first-party data, which is good for our industry. And those are the trends. Thank you.